You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Good morning, Jim.
The gold indexes might be ready to make a move. Maybe explain that to us.
I think we're entering the period where we're going to see the summer doldrums giving way within the next few weeks to the traditionally stronger metal season in the fall. In fact, September is usually one of the strongest months for gold and silver. And the metals themselves have been fairly lackluster, trading in a broad sideways bend. But we've seen the mining stocks themselves having quite a bit of strength. And what I've been looking at lately are two of the gold mining ETFs, the GDX, consisting of fairly good-sized producers, and the GDXJ, which is a more speculative ETF that has exploration companies and smaller producers in it. And the GDX is very close to breaking out of a multi-month pattern to higher highs, and the GDXJ is a little bit behind but not too far. And so I would kind of look at those as the light in the gold mine tunnel, which gives us an indication that if these stocks continue higher, which is a good sign, that we'll see higher physical metals prices into the fall, which is an even better sign.
On trading today, gold is up slightly, silver down slightly, below $20 an ounce. Is this an indicator of what's going to happen, or is this kind of the calm before the storm?
I think your characterization, Jim, of the calm before the storm is a good one. The metals prices are coiling. If you push something down long enough and it won't go down, it's going to probably go up. And that's what's happening with the metals. The bears keep trying to push them down, and silver doesn't want to stay below $20, and gold wants to get above and stay above 1,300. And these patterns don't tell us anything right now for sure. But we want to watch for a breakout. If gold can move even $30 or $40 higher and hold that, that would be very positive on the charts. And if silver can get up even to get above $21 and move into the $22 area, that would be very bullish as well too. So if a person is going to add to their position, the time to do it is when things are quiet. On the physical space, the bid-ask spread is more narrow when things are quiet, so you don't have to pay quite the premium on the gold and silver. And for the stocks themselves, the same thing there too. The spread is narrow. And once everybody decides, it's time to jump in, then those spreads widen up. And I'm really heartened by seeing some things in the press that you normally don't find that are what I would call gold-friendly. And three things that come to mind is that I've seen several major banking houses over the last couple of weeks become more outright, I won't call them super bullish at all, but positive on gold, whereas they had been talking it down earlier in this year. And if you remember, Goldman Sachs was leading the charge talking about 1050 gold or lower. And they're not saying that anymore. They're talking about a positive rising trend for the metal. Also in the Wall Street Journal, just in the last day or two, they wrote an article about how large money is going into the gold mining stocks. So that's a second indicator that I would see that's positive. And then another one, Dennis Gartman, who is certainly no big friend of gold, he's an agnostic on it at best, was talking about it in a much more positive way to his clients, for whom he charges $500 a month for his newsletter. So these are straws in the wind, but I think they're important ones, and they're showing a kind of an emotional change from outright bearishness to neutrality to moving into a more bullish posture. So that's that evolution we've been seeing while you and I have been discussing this over the last 6 or 8 months, and it's now becoming more obvious to people like us to kind of pay attention to it on a daily basis. And I think within the next few weeks or so, and certainly the next couple months, it's going to become very obvious to people on Main Street.
If silver and gold are going to pick up this fall, which one will make the charge first? Does silver follow in the trail of gold, or will silver finally make a breakout and close that traditional gap between them?
Well, we want to see them both make a move, not necessarily on the same day or even the same week, but we don't want to see gold moving strongly with silver just sitting there. And that's kind of what's happened lately. Gold has been relatively stronger than silver, but I think it may well be that gold will continue to be stronger, and then silver will start catching up. And what can happen with silver is it can kind of sit there for a while, and people think, well, what's going to happen, if anything? And suddenly it makes a real big burst. It's much more volatile when it gets underway than gold itself is. So I'd kind of expect a surprise for both of them, maybe moving in tandem, and then suddenly silver becoming much more powerful as we get these moves underway. And it's all about money flow. The more money that goes into some investment, the more likely it is to go up, because most people that put money into these things are bullish. We're seeing major drawdown on the Shanghai silver exchange, where they actually they actually settle in physical rather than paper. Their silver is down 90% from where it was when they first established the exchange about a year and a half ago. And they're actually doing more volume on a daily basis in the COMEX, which is really pretty amazing. Also, we're seeing more money going into not only the GDX and the GDXJ that we talked about this morning, big money and hedge fund money going in, but also into the better mining stocks themselves. They're either staying where they are and refusing to go down, or moving on up. And there was one particular stock that I followed this summer that I have held a position in, and it looked like it was going to drop well below $2, and it just won't stay below there, and it actually is back up above 2 today and has held there for quite some time. And I looked at the chart and I thought, I had reduced my position before on this stock, but I'm going to pick it back up, and so I bought more of it this morning while the market was quiet. So I think that the risk-reward ratio in here for people that have done their homework on a particular gold or silver company or a particular ETF like the ones we've just been discussing, I think is improving by the day.
Are people going to move to gold and silver because they expect the equity markets to correct downwards?
I think that's becoming a bigger and bigger consideration, even as we see these markets bouncing back up again, to at least try to establish a new high or challenge the old one. Anyone who's really been paying attention to this market knows that this 5-year market is due for something more than just deposit refreshes, even if it goes to new highs first. The risk-reward ratio is getting tougher and tougher to really balance out, and things can turn on a dime, like we saw with a several hundred-point drop a week or two ago, and these things can come out of nowhere. So overstaying the party is can be worse than getting in too late.
What about our other two precious metal pals, palladium and platinum?
Both of them have been holding their gains well. They've had a fairly deep retracement, but palladium itself is the strongest of the two, and it was up sharply yesterday and is holding its own today. So again, a metal that doesn't want to go down has got to go someplace else, and it's usually going to go flat for a while and then move on up. So everything is looking very positive with the PGMs and also the underlying stocks that are reflections of them in the production sphere.
You were talking about silver usually starts to make some movement when the Silver Summit is held. When is that and where is it?
Well, that'll be in October. I believe it's the 23rd this year in Spokane, as it's held each year there. So, frankly, I can't. It's hard to predict the future with 100% accuracy, but it would not surprise me if silver's putting on a pretty good show well before that takes place, and it would certainly affect the attendance and the attitude of the attendees. But it would be very nice to see silver trading someplace between $22 and $26 an ounce, and don't cash in your mortgage to buy the silver now. But I do think that that's a real possibility. And I personally have added to my ETF leveraged silver fund position in the market. I did some this morning, and I'll add a little bit more on any further weakness, because to me, the risk-reward ratio is very good. I would see it as like 4 or 5 to 1. In other words, risking $1 for the possibility of making 4 or 5 over the next 6 months on a leveraged ETF for silver. And to me, that looks like good odds.
So, David, again, more evidence that it looks like silver's about to make a significant move?
Well, some of the best people in the business are supportive of that view. Jeff Clark wrote a wonderful analysis at KC Research just a couple of days ago, and Richard Russell is very bullish on silver, and James Turk. And these are people that are not, they don't jump all over the board, change their mind every 2 days. So it just, when when silver gets quiet like this and when it looks kind of crummy on the charts and all that kind of stuff, it can just go out of nowhere and suddenly be up sharply. It could be up $2 an ounce over a few days from where it is now. And whether that happens later this week or, the third week of September, the point is, we're leaving the summer doldrum season and we're getting into a seasonally strong period. So that alone is supportive of firmer prices.
David, thanks a lot for chatting with us.
You bet. It's been great talking with you, Jim.
My guest has been David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.